So Kevin, what were you thinking when you saw the reaction? You guys are finally ready to open up to investors and analysts yesterday after 3 years, and the stock dropped pretty sharply on some of your guidance.
I think people took a look very early on. The good news about yesterday is we had a chance to talk to over 100 institutional investors and really lay out a 5-year plan of our story, which is, it's complete, it's transformational, and it's something which covers everything from structure to strategy to culture. And I think we're incredibly proud of the progress. And I think when you talk to those who got a chance to see it, to touch the products and have exposure, over 23 of our executives across the organization for a comprehensive review, I think when you look into the fundamentals, I think that they're there, and we've got a very clear play. We've called the play, and now it's a matter of execution. And so, that's on us, and we'll let time tell.
Yeah, and partly on this guy. So, Patrik, two big sources of disappointment that I'm reading about this morning. Number one, on the near-term outlook in terms of a turnaround, and number two, on the longer-term expectation for North America, growing mid-single digits, which is less than Nike has baked in.
Yeah, I think as we came out of 2016 into 2017, we had a inventory situation that was building. We've been working through 2018 to get that under control, and as we turn the corner into 2019, we're building back into more of a premium full-price brand. I think what we tried to lay out yesterday was how we were going to go through this protect this house timeframe between 17 and 19 in about a low to mid single-digit range, and then as we exit that in 2020, more of a mid to high single-digit range, and then in the out years returning into a double-digit range.
Were you purposely trying to be conservative?
Well, I think it was more also about thinking through holistically the entire company. So we're moving from this more North American-centric company into this global entity where we're going from a 25% share in North America and now moving into 42% international over this time frame. And what we were trying to talk about yesterday was really the EPS, right? We're giving a 40% cumulative CAGR EPS over this period of this next 5 years, right, and a 20% ROIC at the end of it. Generating more than $2.5 billion of cash flow in that time frame, and that was really the story. So yes, we're a growth company, and we're turning to stronger growth in the out years. And we're becoming more of a global company, and we're giving much better shareholder return.
Clearly international is the growth story, Kevin, but what's the problem in North America? This was a market that you dominated, led to your growth in the early years. Why are you having trouble turning it around?
This isn't about the market. This is about Under Armour. And so how do we make sure that we're strong, that we have the pieces? So when you look at the transformations we've been through, use 2 great examples. One would be on products. As we've gone from a head of apparel, a head of footwear, a head of accessories, so now we have 9 distinct categories where we can drive and say, how do we get incredibly close to the consumer and make sure that we know who they are and what they expect? And so empowering that with our teams of making sure that this isn't about any one person, but it's truly cultural across the organization.